You got it. I'm here, buddy. You gotcha.
Okay. Hello, everybody. Welcome to your Tuesday edition on this short trading week. Hope you had a relaxful and reflective day off yesterday, thinking about all the wonderful things that you have, the privileges, the freedoms you have in this world, and saluting some fallen soldiers for that. Back to brass tacks with trading and investing today. Obviously, we had not the greatest market moves. I was hoping they'd move up a little bit more so I could buy some more puts, maybe sell some more calls against my current positions, but we'll get to that here in a little bit. Now, today's show, I'm going to do something a little bit different. Many of you have been asking more details about people's trading styles, more specifics about how they do it, what they do it, when they do it. And I thought, okay, you know what? A lot of my guests have courses or work for a school or do their own program, and obviously they're not going to tell you every little thing that they do, but at least we can get kind of the high end about what they're doing and how they act. So I kind of felt like maybe that's where I'll push the guests to do going forward here. So I'm calling this Establishing Your Trading Style. There'll kind of be maybe a series that we decide to do. I'll cut these pieces out and post them on the YouTube page for those that want maybe a Cliff Note version of what happened. But today's guest is no stranger to the program, but on the program many times. We've got Jerry Baldwin joining us from some sunny, undisclosed beach location. Jerry, how you doing, my friend?
Merlin, I'm fantastic. How are you doing? It's so good to be here and great to see you. How are you?
I'm great, man. It's been a while since we've had you on the program. What have you been up to?
Oh, just having a ball, man. Doing plenty of trading, doing plenty of traveling. Kicking off summer this past weekend. The pools are open, the beaches are open. It is fun time in the Midwest, so it is ready to go, man. I am super excited and super grateful. Still doing a ton of trading, hosting my trading room every day, doing some one-on-one coaching, and really staying involved in the markets. But the rest of the time, really enjoying life and ready to spring into summer here, having a great time.
You always have been one that has that zest for life. I got to appreciate that.
I appreciate it. I do, and so do you. And that's what makes it work, man. With the travels we do and the attitudes we keep. I mean, it makes for an enjoyable time when the two of us are together. And yeah, hey, we got to enjoy what we have. So it's that's what it's all about. But thank you for the nice words. Absolutely.
You're welcome. I was always told by friends and adults that there's two things in life that are certain: death and taxes. And as several of our past presidents have outlined, and CEOs, you can get around taxes. Death is the only one that's for sure, so have some fun along the way and do as much as you can. No, Thomasina, he's not with Bar Chart. I had the wrong company name up there. We'll talk to you more about how to get in touch with Jerry and what he's been up to. But what I want to do is I want to share with people a little bit about your routine, right? I have my way of doing things, and every trader has their own way. And I feel that the biggest challenge isn't necessarily finding a strategy that works; it's finding one that works for you. So, if you would start us off with kind of how you got in, not necessarily the whole history of how you got into trading, but I want to know, why did you choose the asset class that you chose? I know you're predominantly futures; you trade a lot of things, but how did you wind up with futures? And then we'll work into your trading style and what you look for.
Yeah, absolutely, Merlin. I was, I started out trading stock. I went to options a few years after that. I learned options, and then I was introduced to the futures market. And it seemed like the things that I was trying to do with stock became so much easier and just simpler when it came to the futures market. I like to intraday trade, so I like to be in positions and out of positions same day. And I'll go down to something that's maybe as small as like a 5-minute time frame, maybe even a little bit smaller sometimes. And that's the kind of the style that fits me. But I was looking for an asset class that would, provide the most opportunity while still having some great other positives along with that. And that's where I found the futures market. It's virtually a 24-hour market. There's, tremendous volume during the normal trading day of, 6:30 to 1:15, Pacific time. But the market does provide opportunities outside of that time, which is fantastic. The volume is great during the day and then adequate, the rest of the time. And the ATR, the moves that it provides is phenomenal. I was trying to achieve daily goals on equities, for example, stocks, and with some you can do it, and there are those that you can do it with, but with futures, it's that much more prevalent. And then of course the big difference between trading, two differences between trading futures and trading stocks is the margin requirements with futures is so much more favorable than it is with stocks. With no pad or day trade or capital requirement of $25,000 in your account. No limits to the number of trades you can make. And then, of course, literally getting into a trade for, in the case of the micros now, for as much as a few $100s. So it's like,
Right.
the advantages were so overwhelming. And then, of course, there's tax benefits to trading futures that there is not available to you with trading, stocks. So it became for me a no-brainer. I wanted to intraday trade. That was something that I wanted to learn, very badly, to the point where I was, hiring coaches and going to different, education groups. And, ultimately you find what works for you. And that's, that's what we'll do here today. Is I'm going to share, some of the things that I do. And, I'll be identifying with a great number of people. There will be other people who, for whatever reason, whether it be a full-time job or whatever else, won't gravitate necessarily to the time frames and the style, but they may like some of the indicators that I have to share with regard to how I identify trends. So that's kind of how I came about it, Merlin. It was a matter of just, I knew what I wanted to do. It was a matter of finding what asset class fit that personality the best. And for me, it's for sure futures.
Yeah, and I think that there's obviously that discovery process. Now, one thing I want to talk about is your trading style. So you mentioned that you like to be out by the end of the day, which we'll just label it as a day trader. Whether some people like that term or hate it, I'm actually a huge fan of it. But let's talk about some of the risks associated with that, because a lot of people, we know some instructors very well who are like, if you're a day trader, you're just a natural loser. You're never going to make it because day trading is so challenging. What would you say to somebody that comes at you like that? Like, oh, well, if you trade for the short term, you're just going to lose money. How do you approach that topic?
Well, I would say that, they probably maybe weren't trained in exactly how to do it, because myself and other traders are living examples that it not only it can be done, but it is being done. Mm-hmm. And so it's a learnable skill like anything else. So yeah, I would say that there's that's not a true statement, because like I said, it's being done, but but you do have to be trained in that time frame. You have to be trained in the intraday time frames, and I think that's why I'm so detail oriented with regard to even how I identify trend. I'm not looking at a monthly or a weekly chart to identify the trend,
right,
because I'm not trading that long term. I'm going, I'm using up to a 60-minute, maybe as large as a daily time frame, and that's as large as I'm going. But my time frames are very much custom to identifying the entry window, and then very much custom to identifying the trend. So you have to absolutely be trained in how to day trade, what specific styles work with regard to day trading, and then be realistic about profit goals, be realistic about risk management. I think that was the other big thing with day trading, is you have to have a solid plan. You have to have daily goals, but I think even more importantly than that, you have to have daily loss limits. And I know I mentioned in over your show before, which is such a pleasure to do. But I've been through a number of trading combines, where they'll put you through a combine, and if you pass, 2 levels of combine, they will fund you an account. And that's a true story. I mean, that's real. Again, I'm a living example of that. I've got an account that I'm trading that I did not fund. It was funded for me as a result of me successfully completing this combine. And one of the things that I learned in there, one of many though, was daily loss limits. And it was amazing, because you go into this combine, and it's like they have a X amount daily loss limit, and if you exceed that, you literally get thrown out of the combine and you have to pay to come back in. So that's one way of really learning how to manage risk. And so now every candle I look at, whether it be a 1 minute, a 5 minute, 3 minute, whatever it is I'm trading, the first thing I am trained now to do is to look at the length of that candle, the risk of that candle, and know whether or not I could be trading the mini, trading the micro, or I have to pass on that trade. Because again, if I exceed my loss limits, you get tossed. So people, it's funny, people will say, how do you establish that discipline? Well, do it wrong enough, and you're going to learn how to do it right, because again, it's enough gets to be enough. So yeah, it's just something you have to be trained in, Merlin, because it's not for everybody. Not everyone has the discipline to be able to do it, but it is a learnable skill. It's just something that you have to be trained in how to do it specifically.
I agree. And I think that, for me, because I spent the majority of my early career exclusively as a day trader, and then I resonate a lot with your points here, is for me, risk management was the number one thing. I didn't care about making money, because to me, making money was a byproduct of not losing it. And I think that as a day trader, it's even more critical that you have to be vigilant. You have to be militant about your stop losses, because you're trading in such a small time frame. You're generally trading with bigger share size, or more lots, or more contracts to accommodate for trading for an hour versus 3 months. That if something gets away from you, you're screwed. So I think for anybody here who lacks discipline, or maybe you're using mental stop losses and you don't adhere to those, I'm going to probably recommend that you don't get into day trading until you're rock solid there, because if you're short-term day trading with 5, 10, 20 contracts on and it gets away from you and you don't have a stop, you're done. Your account is evaporated. So just wanted to throw that out there, because I think that is probably the most important piece to short-term day trading is just being absolute military about your stop losses.
Let me show you something just to give the people a visual of the point that you and I are both making, and then we'll move on to the next subject. But let me share my screen real quick. I'm going to go to you know what? Can you give me the ability? It's saying. Yeah, just.
Great.
Let's disable this. So.
I will do my best here. Give me a sec. I will.
No problem.
I've got to figure out how to do that. Let's see. I think I can do multiple participants can share some of this. So now I try it.
Okay. There we go. Thank you, Merlin.
No problem.
I want to, like they say, a picture is worth so many words, right? So let me show these guys an example of what we're talking about, because this is, this is a trade that came out of my room this morning. This is on the NASDAQ. So this is a TradeStation chart. Everybody should be able to see this. Again, the chart doesn't make a difference who you're using, but this is the, let me put an arrow on. Well, here, you know what? You see this blue dot down here? I know it's faint, but that's the blue dot. So this is the entry candle that I'm using in this example. This is the NQM. This is a 5-minute chart. And so one of the things that I do that really helps me with regard to understanding risk reward is I've customized my fib drawing tool, and it's up here in the drawing tool. You can get this on any platform, but it's the fib price retracement line. And I've customized this so where, and I include snap mode. So I go to the top of the candle, I go to the bottom of the candle, and now all of a sudden it shows me literally exactly what my risk rewards are at 1-to-1, 2-to-1, and 3-to-1. So it's an amazing, here, let me fix this right. It's an amazing piece. So again, by snapping it, I've got it programmed to where I can see exactly, what the risk reward is on any particular time frame. So this is the entry. I'm looking to get long above that. I'm putting my stop down below this candle. So immediately I have to identify, and I have to understand tick values. So this is X amount of points. Okay, what does that translate to on the mini? Is that too much? Okay, then I'll go to the micro. Now I know it's only 1/10 the value. And then, for me, what I like to do, and this has been a game changer for me, is understanding how to lock profits in along the way. That's why even if you did like 2 contracts, if you lock one in at a specific level, like a 1-to-1, for example, it gives you the peace of mind and the confidence to hold in there for some of those bigger moves. In this example, it was a 2-to-1 or 2.5-to-1. And then of course, even if the whole thing goes against you, you're still walking out with a modest profit. So learning that kind of methodology, really helped me in terms of intraday trading. So you're not just taking small gainers, but you're locking small gains in along the way, but then also allowing yourself to be a participant in those bigger moves, which ultimately are the home runs, which ultimately grow your account. So this fib drawing tool, like I said, for me, I want to just give them a visual of exactly, what I use, how I use it, and this is worth, 1,000 words as far as being able to see, how exactly I identify those, I identify those specific entry candles.
Now, so you have all these pieces here, and obviously we're looking at a 5-minute time frame, using fib and extensions and retracement tools to help kind of set targets and expectations. When you enter trades in, whatever time frame it is that you're on, are you using bracket orders? Are you putting your entry, stop loss, and price target, or are you kind of saying, all right, I'm going to enter this one and keep manual stops, because I'm assuming you're going to be sitting there watching that trade as it progresses and not kind of walking away and going to play golf or something?
Right, Merlin. Yeah. So yes, you're watching it for a while, but absolutely the one thing that I learned to do right off the bat, and again, there's a number of ways to do it from this platform. You could do chart trading, you could do it from the order bar. I generally, I'm going to pull this up for everybody, but what I will do is I will go to the matrix, and This is my favorite setting right here. If I go to the matrix, I've got all my price points in the middle here. What I do is I go over here, change the quantity to 2. And then this is the drop down that I'm using. It is right over here. Attach OSO, and then I'm going to go exit bracket, and I'm going to drop down, and I'm going to go 2 limit 1 stop. So now, anytime I put an order in, at whatever, if I click on the blue to buy or I click on the red to sell, automatically that stop and both targets, if I'm using 2 targets, those all go into play. So that you're getting, you're putting your stop and your target in there automatically before you ever, either before you get filled or as you're getting filled. And that to me has been really valuable too in terms of helping with the discipline of making sure that, you've got things in place, and now all of a sudden things start going against you, you're not changing the plan midstream because you've already got things in. Now it's just a matter of dragging on the matrix or on the chart, literally, your targets to the 1-to-1, the 2-to-1. You're just matching up the fib numbers now, so it's really easy to do, but it's so effective.
Nice. And one thing that was nice about that matrix, for them, if people haven't used that one before, I love the way you're using the drop down of the OCO or bracket orders on there in TradeStation, which is a cool feature. But it's nice because once you enter that, you can drag and drop those stop losses or price targets wherever you want. So it's kind of I think it's a really important piece. What he does is he literally just says, okay, I'm going to buy it at this price, whether it's a market or limit, but attach this bracket order to it. Now, it'll automatically pop up, and those may not be the exact stops that he wants. The reason it's important is they're already in the system at some price that's default, and you can just take and drag those up. Let's say I want it to be a 10-tick stop loss. Great, I'll drag it down to the 10-tick stop loss, or I want my limit to be here. You can drag it up on the matrix, which makes it very easy to do. Unfortunately, not all platforms have something like the matrix or the dome or the ladder, whatever they want to call it. TradeStation is actually pretty good with regards to that feature and functionality. Yeah, nice. Thanks for sharing that one.
That's awesome, and you're entirely right. And you're right. But one of the nice things about some of the other platforms, like I've been learning TradingView because of another combine coming up. But one of the things that is pretty consistent is that you can at least drag from the chart on most of the platforms, which does help. Because like you're saying is, and you took the words out of my mouth. You could have said it better. As far as you get those targets and stops in there, and then once you get them on the chart, you're just dragging them and matching them to your fibs. I mean, it really is. It makes it simple, and it eliminates that emotion. Now you're just plugging numbers in, and you're walking. You can walk away, and sometimes you're better off walking away because you're not going to mess with it.
Yeah, absolutely. All right, so let's talk about kind of hierarchy and importance of trade. So you mentioned, you have a proprietary indicator that you're using to kind of map out. Here's my entries. I notice you use a lot of Fibonacci. What other things are important to you with regards to your trading style?
Yeah, Merlin, for me, it's all about trend, and it's really about, matter of fact, I'm going to share a screen again with you real quick.
Yep.
I want to show you, this is a piece that I really hadn't used a ton, and all of a sudden now I don't trade without it. But it's this radar screen, and this is something that I've customized. Let me bring you back to the top here, but I've got specific indicators that I look for to be able to identify trend, and specifically I'm looking at slow stochastics and RSI, and I've got a blend of numbers that I use there that makes for a real high probability trade. But I always start here, and what I'm looking for specifically are numbers, consistency with regard to the RSI numbers. In other words, you can see that here's the equities on the left. These are the products that I look to trade. There's a couple more down at the bottom, but they're all, and we can talk about why I chose those in a little bit. But these are the time frames that I'm looking at. So you can see for the most part, the largest time frame I'm checking is a 60 with regard to trend, but those 60, 30, and 15, those have to be in line. I've got to see the RSIs bullish. I've got to see the slow stochastic numbers bullish. In other words, K line going over D line. The numbers are right here, in black and white. I mean, you can see how there's no emotion in or as little emotion as possible in my trading. This is about as robotic and automated as a system as you're going to get. I mean, you've got, either the K line is greater than the D line or it's not, and I try to make sure that those are all consistent with the time frames. And then once I do that, then I just look for that on the smaller time frames where, the slow stochastic goes positive, the RSI goes positive, and then, yeah, like you mentioned, and I'm so proud of this because I had help with this, but it's been released now to the students who are in my room and the students who have been through the course. And this is an indicator that literally labels the candles that have a crossover on stochastics with a matching bullish RSI. You literally get the candle labeled right there with that blue dot, and you can see the result of that. I mean, just up. Here's another one. Here's another one. Again, when the larger time frame trends are in line, those crossovers can be really, really useful. And this is not a 5-minute chart. I can bring even more up on a 1. So it's kind of a combination of just matching the larger time frames, like so many people are learning in their own trading, and then timing in on that smaller time frame. And I've got a custom way of doing it with regard to those two indicators in particular. And now this custom indicator that literally labels a candle for us when those certain occurrences happen. So it's super valuable, and it's the feedback has been phenomenal, Merlin. I'm really proud of it and really happy for it.
Good. One thing I want to hone in on here of what you just mentioned, and this is for everybody out there. Bring up your radar screener again, just so we can see the visual. As you notice, Jerry, and I'm not going to speak for him, but I'll speak from my personal experience. When you look at something like this, one of the things I think we all need to be doing, regardless of what your time frame is, with Lisa and Lori in their easy options session the other day, they're running scans. It's about looking for opportunities, and if we can use a tool to make our lives easier, we should be doing that. And what I like here, just look up the top. He's got the NASDAQ micros on there, and you can see 1 minute, 5 minute, 15, 30, and 60 minutes, but he's looking at a variety of different indicators. So he's got stochastics, he's got DMI, which is also called ADX. You also have RSI on there. You got stochastic and RSI crossing. So he's using all these different indicators, and I'll be the first to say, I'm going to go back to my screen. You should never use an indicator as your exclusive decision to be making a trade. But in here, he's saying, all right, I have justification as to why to buy because maybe this indicator is helping me, but it might be demand zone, might be supply zone. But then you use these to kind of add a little more confidence to your trade. So I like the way that you have it, not only broken apart by asset, and he's got crude oil, Russell, S&P, NASDAQ, and probably got a couple more down below, but also splitting it up. So if there are different time frames you might be looking at, I see you got some gold on there as well. So, you got the main big players in the marketplace. Surprisingly, no Dow or Bitcoin in there, but we'll change on that one in the future. But everybody should be using a screener of some sort. Obviously, radar screener, I do believe you have to pay extra for in TradeStation, but I personally think it's worth it. You guys know I'm not the biggest fan of TradeStation's platform or just the... Anyway, we'll leave it there. But the radar screener is awesome. I think it's probably one of the best tools out there. So if you don't have it through TradeStation, find one to help you filter the markets for opportunities, or at least to help you in your decision support system. So I love the radar screener myself.
Yeah, Merlin, thank you so much for that. I appreciate that a ton, and I couldn't agree more. And I it's funny. Again, you took the words out of my mouth. I don't know how many times in the room I've said, and even in webinars I've mentioned, the fact that you should never just use one indicator in and of itself or exclusively. And that's, I think, one of the biggest mistakes people make is they, like you said, they'll do that. Whereas this is a blend. And again, I try to simplify this as best I can. You can see I'm only looking at things when these specific indicators are blending and lining up with one another. So now if you think about it psychologically, I'm grabbing huge participants of the market. There's RSI traders, there's stochastic traders, there's DMI traders. It's not until everything's lined up that I'm actually becoming a participant. So I'm putting so much in my favor that's why, the probabilities of the trades that I'm putting on, is so positive. And then of course the indicator itself that I was able to create a little over a month ago, that is actually like you're saying, that is a blend of two indicators. It's it's a crossover, but then it's a crossover, but while RSI is hitting a specific number or beyond. So it's a blend, and that blend, like I said, you saw it in the examples. It's just an amazing piece. So yeah, I love it, it's great to hear you say the same thing, Merlin. Those radar screens are huge, and when they're used correctly, it can really simplify your trading. I can tell you how many times in the room, we'll be doing the room and we're looking through this thing and there's nothing to trade, and all of a sudden you'll find a candidate just looking at this radar screen. You'll go there and all of a sudden, boom, it's ready to go. So really useful as you start to get comfortable with it.
And we don't have to all use it the same way. I've showed my viewers as many times on how I'll build little watch lists or screeners and be using RSI or stochastics just to maybe alert me to something that might be in an extreme situation. And again, just because something is extremely oversold, hell, if you looked at soybeans or wheat today on a 5-minute chart, you just you feel like Munch doing the screen, going, "Oh my God!" Well, those, just because they're oversold doesn't mean that they are going to go back to the upside right away, but at least I can draw my attention to it and maybe start strategizing for a level at current prices or maybe slightly lower where I might be interested in buying. And I can whittle through tens of thousands of securities in a matter of seconds just by looking at specific watch lists. So if you're not using them, use some watch lists. Two things. Number one, Harshad says, Merlin, can you say hello to Jerry? He was my coach. So Harshad says hello.
Harshad's fantastic. He's in the room every day. He's been through both courses with me. The guy is awesome. He's in the room and sharing great trades. And hello to Harshad and welcome to all the students. So I've got a number of Merlin. I talk about you every day, and they love you. They love your show. Most of them are here probably watching this. If not, they're going to catch the recording later on. But I got so many great people in the room, and it's really great to have them here with us. I told them I was going to be on, and they don't miss this stuff. They love you, and they love when you and I are doing this together. So Harshad and everyone who's here from my room. I want to welcome you guys and thank you for taking the time to be here with us today.
So Michael, that's a good question. Well, there's two questions that come in. I'll do the first one because I think it might be easier. Tom says combine sounds kind of like a prop trading, right?
Yes, that's correct.
Okay, so I thought that as well. And again, you have to look at it from a risk management perspective for anybody who's looking at going to these prop shops. Generally, they're going to give you a specific set of rules, especially if they're giving you capital to trade. And if you don't follow the rules or you lose a certain amount of money, you're cut off and, you're not welcome back there until you can prove that you're going to follow those rules. So I've never been personally a big fan of prop trading. I figured learn how to do it on your own. Don't trade with anybody else's money because then you're on the hook for that. Start with a little bit of capital, start to grow from there, get comfortable, get confident, and over the course of time, you'll be trading much bigger and larger lots and hopefully achieving your financial goals. But some people like to get started with prop firms, and to each their own. Just never was a thing for me that I found interesting. Let's see, next. Michael says, how did Jerry's daily goals change over time? Specifically, did he start with a goal of $500 and increase over time? What is his daily goal now? I like that. That's a good one. And I'll interject on mine as well as soon as we're done with that.
Yeah, it is a great question. I started out just trying to break even. I mean, that was my thing. I just wanted to show profitability at the end of the day, and and then as you start to develop that, it starts to cement your rules. It starts to cement your risk management. That went to $100 a day, and then went up from there. So, if you got a daily loss limit of 500, I try to keep at least that as a profit target each day. So, that's kind of where I am now, but it's, that's something that just like a trade plan does evolve. So, but the first thing in my opinion, the first thing is to keep an eye on the balance in your, whether it be your real account, your sim account, whatever you're trading. Trade it like a real account, check your balance on a daily basis and see exactly, are you growing the account? Just try to be profitable over a period of weekly, over a period of weeks. You might have, days where you're not profitable, but over the course of a week, you want to, maintain some type of profitability. And that's where I would go. But yeah, just starting out small, just becoming profitable, and then you just plug the numbers in. Once you find a system and a style that works for you, now it's just a matter of plugging in numbers. Now, rather than trading a couple of micros, you might trade one mini, and then you can start to, there's so much room, which is one of the reasons I love these products, is that it has a ton of volume. So again, there's not like, there's really no cap to what you can do because there's so much volume here. You're trading 10, 20 contracts. It's no problem because the liquidity is there on all these products.
Yeah, absolutely. For me, I'm a little bit different there, and that's why I love having people like you on the show, because we see things slightly differently. Doesn't make one of us right or wrong. But to answer that question from Michael, I don't have a daily target at all. I will never have a daily target going forward. It's not something I care about. What I do care about is the daily losses, because in my opinion, if I'm on a roll, hey, I'm on a roll. And if I have a daily target, let's say $500, am I going to just now close up shop because I got there? I may be on a heater of a roll, and all of a sudden, if I manage that properly, I could end the day up $5,000, $10,000, $15,000, $20,000 if I trade properly. So for me, I have absolutely no intention of a daily profit goal. Obviously, I'd like to have my account earn money. However, the only thing I focus on any time frame, whether I'm long-term trading or short-term day trading, is stop losses. That's it. So make sure you have a number that you're okay with and say, if I lose X amount, I'll walk away and be done with it. Now, if you're in a winning situation, I think it's critical to say, what's my money management strategy, right? Yes, I've got a $500 profit target per day. Well, personally, I would suggest not backing out and saying I'm done for the day because I hit 500. I'd now start to put trail stops and make sure I'm going to take something home, but manage that, because I tell you, way too many times in my trading career have I had a profit target in the past where I'm like, oh, it's $1,000 a day. And I get to 1,000 and close out my trade and go home. And I look at that trade, and if I just left it open for another 4 hours, I'd be up like $8,000. You're like, son of a biscuit. So just differences of approach there. But I think what will happen for all of you is if you don't focus on the making money side of it, it's much easier to make money. It's funny. I had a conversation the other day, or actually this weekend, about a friend that was trying to get pregnant, and they put so much pressure on themselves to get pregnant that they're not getting pregnant. And I had another friend who was doing the same thing, and finally she says, "I'm done. I don't care if I get pregnant or not." And sure enough, got pregnant right away after that, because you just take all that pressure off of you, and now you can, in that case, achieve your goals. But I think in trading it works the same way. Don't focus on the money. I know we all want money. There's not one person here that says it's not about money. It is all about money, but don't make that your goal. And I have a feeling that your results will be much better for it, because if the only thing is losses that matter, then you won't have the catastrophic ones. And let me ask you this one, Jerry. Have you ever had Have you ever had a trade, like you've been trading positive and it's been like 2, 3, 4 weeks of just nothing but green, and all of a sudden one trade just erases everything?
In the first year, Merlin, in the first year of trading, yes. And I learned quickly after that to just not do that. So now I'm really disciplined about the losses. So, but yeah, the first year's a little over a year. Yes, I can. You and I can both share exactly.
Yeah.
We know exactly what stock it was. So, but yeah, so absolutely, and that's the biggest mistake people make, and that's So yeah, I've done that. I think we've all done that. Go ahead. Were you making another point though?
No, I just kind of laughing because I think it's so funny that it happens to everybody, and it's funny because I was even told by my mentor, like, don't do this. This is going to happen, and sure enough, it happened to me, and it's happened multiple times, guys. This is not like I've done this one time and like, oh crap, I got to stop. You tell yourself you're going to stop, but then, the next time it creeps up on you a little bit, you get a little bit too overzealous, and all of a sudden, boom, one trade wipes out, multiple weeks worth of trading. So anyway, just the perils of starting out and learning trading and investing, in my opinion.
Yeah, and Merlin, I want to add to something you were saying. Because you and I are actually in complete agreement. I didn't say I stop at the profit goal. He asked what the profit goal was.
Okay,
and I told him, but yeah,
good.
I didn't say I stopped there. So I think that, and I'm looking for an example here. Let me try to. I'll get one here real quick for everybody. But yeah, I mean, here's an example, just a ballpark of an example. But the point I was making with the some of the looking for the indicator here on some of these charts. Yeah, here we go. So this is on a 1 minute chart from this morning. Let me grab this real quick. I'm just gonna move this out and reset these lines. But so this is here's the first blue dot down here. Okay, you can see that. I've got a blue dot on the bottom. I've got a blue dot on the top. That's my indicator on the bottom. That's a consecutive up on the top, which it signifies, consecutive closes in the same direction, which is another really good indicator. But this is kind of the point I was making, and really the point you're making as well. So, here's 3-to-1, right? 400% on this TradeStation platform. That's a 3-to-1. Well, there's a number of formulas, and there's one formula that I teach in my courses. I talk about it in my trading room every day, and it's a combination of Globex and ATR, and it literally predicts for us with a high degree of probability how high or low any specific product could go for that day. It's crazy, the precision. I learned it probably 10 years ago. I've been using it, since. But on a day like that, where you've got a bullish trade and you want to let a final contract go, that's absolutely, you may have achieved your $500 right here, but if you've already paid for your trade and you've got one contract left, let the thing go. You can, in other words, either to an ATR level, to a Globex level, to, whatever other, avenue you're using to exit that trade. So, no, I agree, because there are days where, the market, you see where the market's trading with regard to the VWAP. You might be way above the VWAP, and there's room to the ATR. You've got another. I've done this in the room. I've told the room, there's another 100 points to the ATR, and we'll do the room the next day. And sure enough, it hit it. So yeah, it's about locking profits in along the way, but then being able to helps in positioning yourself for those larger moves, which
right.
Absolutely you want to participate in.
Well, it's tough because when I first started out day trading, it was like, get in, get out, get in, get out, get in, get in. It was like no trend consideration whatsoever. And then I actually sat behind a guy who, that was his whole thing. He would literally just pull up a watch list, a screener, and anytime something was making a high of the day that was in this watch list, he'd just buy another 1,000 shares of it. And if it just kept on running, he'd keep adding 1,000 shares every time he went through the watch list. And next thing you know, he'd have like 50, 60,000 shares of a basket open, and anything that was red or negative, he would just sell it right away and just keep adding more and more of those green ones. And like, it's not like it was an epiphany or anything, but it was this realization that, shit, here I am, going back and forth hundreds of times a day, and all this guy's doing is saying, which one is the avalanche right now, headed up or down? I don't care. But let's say everything's just ripping to the upside. Great. I'm going to go and just keep adding to the ones that are ripping because for whatever reason, who cares what it is, they're moving, and I want to be a momentum guy. So I think that that's something that you can add to any trading strategy and say, look, let me give things the opportunity to run. Let me see which ones run and just make sure I limit the downside on any position I'm in.
I think that's such a great definition of just trend. That's a great foundational definition of trend trading, Merlin. That's exactly what it is. It's perfect.
I got a quick shout out here to the Collins boys up in Bend, Oregon. Chris, Kevin, good to see you. Hope you guys are having fun up there in Bend. Maybe I'll get up to see you one of these days. Let's see. Brandon Wendell's with us here today. Brandon, good to see you. He says, Jerry, are you still doing the open range breakout trade?
Yeah, yeah. Hey, Brandon, it's great to see you, man. Oh, so many great memories with Brandon. Brandon's a phenomenal guy, phenomenal trader. Great to see you. And Brandon, yes. And I got to say, as a matter of fact, here, let me. This is from Friday, guys. This is real. This is a real deal here, and this is from Friday. So, Brandon, the answer is yes. Um, and let me just roll back here. I believe this is going to be Friday. Last week was a really good week for that. And so what I'm basically doing on the opening range, and I actually put a segment into one of my courses, is I'm looking for, again, the larger time frames to be, in line or trending upward. Matter of fact, still have it marked off from the morning. And this, let me grab it here. So this new indicator that I come up with about a month ago, is literally starting to label those candles for me. So let me move this vertical line out of the way here. And you can, so like I said, yes, the answer is, oh gosh, the answer is yes. Let me just scroll back. I lost that for a second, guys. But hang on, this is worth watching, so don't go
problem.
anywhere.
As it gets there, for those of you who might be wondering, maybe later on this week I can show you, there are things that you can, they're called paint me and show me bars in TradeStation. And I'll show you guys maybe later this week some basic examples of things that you can do to create that type of color dot strategy, or sometimes I put arrows in front of you to show you when you get in and get out. But again, remember, you got to really know the rules behind your tools. That was poetic. Make sure you really understand what it is that you're using and how to use it, because it shouldn't be the exclusive thing. It's in my opinion, an odds enhancer to help you be on the right side of the trade. Anyway, walk us through it.
No question. And so this is Friday. This is 8:35. Again, the markets were closed yesterday, so this didn't apply yesterday. But you can see, and let me just bring this up right here. So this is 8:35 Nasdaq Friday morning. So that's the first. This is opening range breakout, opening 5-minute breakout, and you can literally see the new indicator literally labeled that candle for us. There's the dot at the bottom right there. So it's showing you the blend of two indicators going positive. That's why the indicator is blue. And then you match that up with that consecutive dot, which you're right. It's under the show me's. It's a consecutive ups and downs. It's an amazing tool when used in line with other products, or other indicators, I should say. And so sure enough, yeah, we broke the opening 5 right here at 8:36. This is all central time, opening range, opening 5-minute range. Literally look at the little bit of basting at 1-to-1. And then what I love is look at the precision on the 2-to-1. So you take the candle and you multiply it times 2. Look at the crazy precision. That's exactly where the professional traders had gotten out for hours. That was the top of the market right there. Was the 2-to-1 off of that opening range, almost to the tick. Yeah. I mean, just crazy precision. So Brandon, yes, absolutely. I've obviously kind of modified and updated the opening range breakout, since I first, shared it, so many years ago. And I know you've done the same. You've done a great job with it as well. But yeah, it's still certainly a part of my trading. And I want to say Thursday was the same example. Thursday was a huge one as well. Ultimately went to 3-to-1 on Thursday. And obviously this one from Friday. Yes. So my indicator is really worked out well on this. And then also the consecutive ups and downs has been another really nice tool. So yeah, loving it, Merlin. It's going really well. Again, you got to have criteria, you got to follow rules, but when it hits, I mean, this is here actually, to put this in perspective, 470 to 606. That's a 136-point trade.
I'll take it.
Yeah, right. And you're done by 11:05. You automate this thing here, you bracket it, and you get the heck out of there and go enjoy your day. And by 11 o'clock, you come back and you look at your account, and you're up 130-something points. So yes, very cool strategy. And Brandon, it's great to see you. And yes, I am still doing it. And like I said, I've modified it and updated it to where it's now more powerful than ever.
Nice. Well, welcome. I got Yale and KP60. I always forget to do gratuitous self-promotion, but yeah, if you guys are new, hit that subscribe button. We do the show every day at 2 p.m. Pacific time, so you can always feel free to send in your topics for discussion. If there's somebody you want me to bring on the program to interview, I'm happy to do so. You can email me at tradermerlin@gmail.com. Jerry, how do people get in touch with you? I know you're always doing many different things, so how is there a website I can send them to? You got a Twitter feed? What do you want me to send people to get in touch with you?
Yeah, please, Merlin. If you want to put it up there, it's going to be J Baldwin 2022. It's Twitter. So it's J as in Jerry. So it's J Baldwin 2022. So at J Baldwin 2022. That is the Twitter feed. It is literally. I'm just getting it off the ground now. I have an Instagram. The Instagram is Futures Coach Jerry. But let's focus on the Twitter, so people, because I'm going to be putting some big things up there in the coming days. So J Baldwin 2022, and that is the Twitter feed.
All right, I got it up there right now. It took me a second to get it up. It's at J Baldwin 2022. will be Twitter.
Jerry
Cool.
Baldwin 2022. Yes, sir. Yeah, that's perfect, Merlin. That's because, I want to, I'm building the followers. And like I said, I've got some amazing things coming over the coming weeks, and I'm going to be announcing them there first. And then there will be, there will be more. So but I absolutely want people to know how to get a hold of me. And be aware of some of the things that we're doing because, like you said, I keep myself very busy. I try to, deliver some high level stuff to people, and it's going no better time than right now. So absolutely, thank you for that, Merlin.
Oh, no problem. Well, hey, Jerry, thank you so much for coming on. I appreciate you sharing some insights into, your trading evolution, your style, and how you do things. So much appreciated. And let me know when you get your Twitter feed up and rolling. I'll hit you up in some tweets.
You got it, man. Merlin, it's great to see you. Look forward to seeing you in person soon. And thanks again. And always enjoyed. See you soon. All
right, take care, my friend. Guys, that was Jerry Baldwin. You can find him as he mentioned there. He's got his Twitter feed just starting out, so we'll see get him a little bit of love on his Twitter feed over there. So today, my main focus was looking at establishing your trading style. Obviously, I'm going to try to do multiple times or more in the future. I used to do a thing where it was basically just, hey, let's ask them a few questions about their style. But I think it might be nicer to go deeper in depth with a lot of the guests I have on the program and have them give you some examples to show it how they trade. And I think Jerry has, an interesting style. I like the way that he uses a combination of indicators. I like that from his perspective, I'd rather be just a day trader. I can get in, get out, and not have to worry about all the other market fluctuations. So I think that is important. But, there's a lot of haters out there. There's a lot of people that say if you're a day trader, you'll just do nothing but lose. They're actually right. The vast majority of people who attempt short-term day trading lose money over time. And it mainly has to do with an inability to control their risk. They're too focused on making money because the pressure's on them to make money in a short-term time frame. Therefore, they're generally trading much bigger than they need to, or trading things that are way too volatile or low liquidity without really paying attention to the market. So if you are headed down that path and thinking, hey, I want to be a short-term day trader, I can bring on countless traders and instructors that will caution you and say, hey, be really careful. It can be very dangerous if you don't have discipline or risk management. I also like that he is, from his perspective, even though he's a day trader, he's looking at multiple time frames intraday. And again, I think that anybody's trading style should have multiple time frames. For me personally, I start at the highest is generally going to be the daily time frame, and I'll go from the daily to the 4 hour to the hourly to the 15 to the 5. I don't go any lower than the 1 anymore. I used to, but just not anymore. I think the 1 minute charts, it's just too stressful for me. I found that I actually did a lot better when I stepped it up to 5 minutes, and who knows, maybe the older I get, I'll be at 15s or hourlies will be the smallest time frame. Bob Dunn, he's just so old, he just uses daily charts. I'm just kidding. I love you, Bob. Just throwing some shade at you. Brandon said, I lose all the time. The losses are just that much smaller. And yeah, exactly. I use this example all the time. I am not a New York Yankees fan. For some reason, I just hate the New York Yankees. I think it's because everybody just loves the Yankees. But Derek Jeter, who is one of the best pure baseball players, I think, in my generation, over the course of his career, he batted .315. That means he failed 68.5% of the time, and he will go directly to the Hall of Fame first ballot. No question about it. And I think, to think that you can fail 68% of the time and still be rated one of the best in the world in history is pretty impressive. Obviously, in trading, if you fail 68% of the time, you better have good reward-to-risk ratios. However, I agree 100% with Brandon and actually a lot of guests on this program, which is, look, I lose a lot too. I have no problem admitting it. It's part of what I do. Losing, it's kind of like hitting red lights on the way to work. It's going to happen repeatedly. Some days you hit all the red lights. Other days you get nothing but the green ones. And to me, that's really where your trading days are awesome. So Jerry Baldwin is our guest today. You can find out more information from Jerry by visiting him on his Twitter feed. That is going to be, I had it up there there it is. It's J Baldwin 2022 on Twitter. All right, let me regroup here and pull back that and get some other slides up because I didn't have a chance to bring in all the economic announcements, so I'm going to click through these one by one here because I do think it's important, especially since we talk about earnings. There were a couple that came out which obviously, weren't that great. Here is Canopy Growth, CGC. We had ACB last week, not doing so hot either. Canopy Growth missed big time today. That was yesterday, sorry. On Friday session down, this is old. Get this out. Why is this in my, I knew I was making mistakes today. There is your E2. The E1 doesn't matter because there was nothing great today. That was Friday's session. Here is the exciting stuff for tomorrow. Now, I'm not going to be trading this one. If anything, I will be selling some puts at like 170, 180. I'll go deep out. I'll go way out of the money on this one. Because, actually, I won't touch it. I'll leave GameStop alone. But GameStop, again, is dying. This is blockbuster video for video games. They're trash. It's garbage. It's going to go to zero someday, yet people still feel it's worth $124. What we're probably going to see is their $8 billion market valuation is going to be just trounced tomorrow. My guess is they're going to be losing a lot of money because has anybody in here gone into a GameStop in the past year? Anybody? All right, I have. I've actually walked in and I took a picture of one when I was going to Zion. However, most people probably aren't going to these stores. GameStop reports after market close tomorrow. I don't really want to call this a popcorn trade of the day, but it's traded $124, so I'm going to call it the popcorn trade of the day. I mean, it's down 9% today on anticipation of earnings, so we'll see how this one actually pans out there. Anyway, let's move on from the popcorn trade of the day into something else. I had some other economic announcements coming out for tomorrow. Tomorrow's actually a really big day. I'm going to just zoom in here because of the holiday, we're going to have more kind of a condensed approach to economic announcements tomorrow. As you notice here for the U.S., starting at 6:45 in the morning, we have final manufacturing numbers. And of course, this is big because it's Europe, it's the British pound, it's a euro. You have Germany, France, Italy, and the whole EU reporting manufacturing numbers tomorrow. So that will be a very interesting one in my opinion. But for the U.S., we've got huge numbers here. You've got ISM manufacturing PMI, JOLTS job openings, construction spending, which they're expecting a significant increase. Well, we've seen new home sales and pending home sales crater. Let's see if this is worse than expectations on construction spending. You also have ISM manufacturing prices. You have Ward's total vehicle sales. Plus, FOMC members Brainerd and Bullard will be speaking. And I feel like I just need to take a deep breath because we got one more. You get the beige book coming out for the FOMC and for the Fed. So, very interesting seeing all of these announcements happen tomorrow. And if you are trading the Canadian dollar, there is a rate announcement expected. And they are expecting there to be a 50 basis point increase for the CAD tomorrow. That could obviously create a lot of waves out there for anybody who's trading that USD CAD currency pair. It has been, the Canadian dollar has been very, very strong lately, maybe in anticipation of them raising their rates. I'll show you the chart here real quick. Here's your Canadian dollar. This is actually the U.S. dollar against the Canadian. So as you can see, the U.S. dollar has been selling off. That means the Canadian dollar is actually been getting stronger and stronger and stronger. So we'll see how this one all pans out here over the next 48 hours, but could add a lot of excitement to anybody trading the Canadian dollar. SRL says, do purely price action traders still exist? Yes. I would actually throw myself in that camp. When I say purely price action, I'm not saying, hey, I'm just sitting there glued to the time and sales. That's, in my mind, what it would have been back in the day. But am I just looking at price charts? Yeah. Yes, predominantly, I'm just looking at price charts. I don't really look at earnings because it's just too unpredictable. Who cares? I don't look at the fundamentals for companies unless it's something I'm really thinking of long term. But generally, if I'm thinking long term, I'm just going to go into an ETF that represents the whole sector. I personally would rather remove that single stock risk over the course of time because anything can happen, as we've seen with Google, Amazon, Facebook, some crazy moves lately. So I would throw myself in that category SRL as I'm a purely price action trader, and I think actually the vast majority of people that I know and trade are price action, saying, let me look at these price charts and find levels. Let me find zones. Let's see how things are moving, how they're setting up. I see price patterns. Am I using fibs or some technical indicators that help me out? I would call that price action trader. So I would say that encompasses almost everybody that I know. I know a few people like a Larry Jacobson who will, look at a bit more fundamentals, but he's using fundamentals in combination with the technical side and looking at price action. So absolutely. I'm short Ethereum from 2000. What do I think about the level on the 4 hour? Ugh, gosh. Boy, we had a huge rally here in the last, or over the weekend. Let me bring up Ethereum here for the viewers at home. There we go. Where's my ETH? This is just not sorting by, there's my ETH. So you're short at 2,000. You got to be real careful because there's a lot of people who are going to start bottom fishing here, and I think that's part of the reason why you saw this big bounce. And also, you're being really, it's dangerous, Frank, and I think extremely dangerous to be shorting at this point. If anything, I'd be looking more towards the long category. Why? Because in August, which is just a couple months away, Ethereum's going to roll out and move from proof of work to proof of stake. If they do that successfully, which I think that they will, you could be in a world of hurt. This thing could just go screaming to the upside. Now, granted, it could fail, right? This transition from proof of work to proof of stake could have bugs and clunkiness and not go well. Then your $2,000 short is probably going to look pretty good, but I'd be careful on that one. I have a hard time shorting crypto, even though I do think it's going to continue to drift down here. Obviously, that chart of Ethereum looks ugly. It's actually right at a level that it has not had a chance to get below. So, I would look at this from the perspective of 1,733 is kind of the floor there. If you're shorting at 2,000, you're basically saying, all right, I think I can make 267 points on this bad boy. Great. I would be quick to lock in some profits on this short. If it gets down below 1,733, great. Look to short it again. But there you go. What do we got here? I lose a lot of time. Risk management is key. I'm leaning towards using a calendar and a sundial. What, to make your trades, Tom? Hey, there is a guy, I can't remember which firm he worked for, but he actually got, I want to say he got $50 million worth of backing, financial capital, because his track record using the migration patterns of elephants was how he picked his securities, and apparently he was doing really well. There's an actual document that says that chimpanzees throwing darts at a newspaper can beat most fund managers. So, take it for what it's worth. I think if you look at the results there, though, it's probably all money management, stop losses, and if you stop yourself from losing big, the winners take care of themselves. All right, that was pretty much it for tomorrow as far as the economic calendar goes and earnings. Really not much to see there. I think, did I have something else for earnings tomorrow? Yeah, we already brought that one up. So that's going to do it for me for today. We wrapped up, almost got an hour. Again, I'm trying to make these shows half hour, but unfortunately we just keep on going. All the questions and interaction from you guys, which of course I love it. No guests for me for tomorrow. So if you guys have something you want me to talk about, put it down below the comments on the YouTube video. That's the best way to get questions answered. And of course, if you are new, hit that subscribe button, hit like if you like the show. Of course, you can visit Jerry at jbaldwin2022 on Twitter. I'm also there at Trader Merlin, and I'm also tradermerlin@gmail.com if you want to email me anything. That said, hope you guys have a fantastic remainder of your day. Let's see how tomorrow turns out. I'll see you guys on Wednesday. Take care.